ULIP. Most of the influencers tells you not to invest in it. But do banks sell these as ULIP? They name it as different products like Save for Retirement, Save for your kids' education, where only little is told about the insurance and the focus is mostly made on the amount you will get at the end of the term. Initially, when my son was born and we had zero level of knowledge at investment, a banker told us there was a great plan that would help us save tax, and by the time our son turns 18, he will have 25 lakhs in hand. Also, he assured that he has invested in it. Without even calculating the interest rates and the inflation-adjusted return, we invested in it. And I regret it as the worst financial mistake of my life. The majority of us get into this trap the way I did. Let's understand what is bad about ULIP. But before that, let's understand what is ULIP. Unit-linked insurance plan. It's a promising blend of insurance and investment, where one part of your payment goes into your insurance coverage and the other goes into your investment. This sounds good, right? But where does the trouble begin? Here's the actual catch. ULIP typically offers insurance coverage of just 10 times your annual premium amount. Let's say if you pay a premium of 1 lakh annually, then you get 10 lakhs of coverage. This might not be enough to adequately protect your family. Now, if we start talking about the charges, there are plenty. I would explain few in this video. Fund management fees. So the amount you invest goes into some fund. For managing these funds, there are charges, and typically it varies between 1 to 1.3% now. This has been reduced drastically by IRDAI, which was earlier almost 3 to 5%, and a huge chunk of this would go as a commission to the person who sold you this policy. Mortality fee. Basically, this fee is based on your age. If you literally take a policy at 60, you would end up paying more since the insurance evaluates the chances of you passing away in between the policy terms is high. While if you take it when you are 25, you would end up paying this amount less. The way mortality cost works is that units are proportionally deducted from each of the funds you have selected every month. Fund shifting charges. There are high possibilities that you find some other funds are performing better and you would like to switch. But wait, you are allocated only a certain number of free fund swaps. You will be charged if the number of switches exceeds the number of free switches permitted. Surrender charges. Now, after 3 years of your plan, you are in a situation where you cannot afford to pay 1 lakh as a premium. Then, your amount will be gone to the discontinued fund. This can be taken out only after the 5th year, but you would have charges to be paid. These charges could change depending on when you surrender and how much your premium was paid. Thankfully, IRDAI has capped the maximum amount that can be charged as Rs 6,000. However, there won't be any fees once the lock-in period is through and premiums were paid until then without flaws. Let's compare ULIPs to SIPs and mutual funds. With SIPs, you have a flexibility. If you face financial difficulties, you can stop or hold payments without penalties. Moreover, in an SIP, you can take the money in 1 or 2 days, whereas in the ULIP, the money is locked for a minimum of 5 years, and thereby liquidity is not available. So are ULIPs more dangerous than they appear? It's essential to weigh the risks and benefits carefully. While ULIPs can provide insurance coverage and investment opportunities, the charges and lack of flexibility can hinder your financial growth. The emphasis is more on the savings aspect, downplaying the associated risk. But before diving into any financial product, do your homework, consult with your financial advisor, and make informed choices that aligns with your long-term goals. Also, if you want to know more about Robert Kiyosaki's advice for investment in the future, I would recommend you to watch this suggested video. Please do like the video and let us know your support. Also, don't forget to subscribe so that you don't miss out on any new content. Until next time, take care and make financially wise decisions.